In those areas like renewables, infrastructures, and energy transition, we are actively financing through the project finance the teams. Our approach is slightly different, but because the project finance is sometimes a bit costly for the customers.
Let's focus on Africa and developing Asia. We all know that emerging and developing markets face considerable challenges around liquidity pressures, risk distribution, access to correspondent banking, and access to trade finance. How is SMBC helping bridge some of these gaps?
We try to look at the end-to-end trade flow and then try to figure out where is the bottleneck in terms of the financing, and then where is the opportunity for us to support.
My name is Dipesh Patel, editor at Trade Treasury Payments. Today in TTP Studios, we're delighted to be joined by Kawamura-san, General Manager, Global Head of the Trade Finance Department at SMBC. Kawamura-san, welcome to TTP Studios.
Thank you for having me to this studio.
Thank you.
Pleasure meeting with you.
Likewise. So can you give us a quick introduction? Tell me a little bit more about your role within SMBC, where you're from, etc.
Okay. I'm currently the general manager and global head of the trade finance department, and then this is one of the global department in the bank. And then currently we have approximately 200 people working all over the world. And then I'm currently sitting in Tokyo, and then heading all kind of the trade finance. And then in our department, we cover pretty much all kinds of the trade finance products, starting from the conventional trade, supply chain finance, commodity finance, and then etc. etc. So I used to work in abroad quite a long time, like in New York for 10 years and Singapore for 8 years, and then just came back to Tokyo, my home country, last years, and then currently in this position.
Thank you very much. And SMBC has, as you said, a very broad trade finance footprint across the Americas, EMEA, Asia, and Africa. But I guess each region differs significantly. How do those client needs and financing priorities differ across different regions, and how is SMBC adapting to those differing needs?
Yeah, that's a great question, because the customers' financing needs is quite different by regions. And then what I can see is that in general, in the developed countries, the customers' requirements is more on the balance sheet optimization rather than just a pure funding, right? So our solution also needs to match it, and then we need to provide a very sophisticated solution, carefully thinking about customers' account treatment, etc. In the meanwhile, in the developing countries, still the funding itself would be the purpose. So we need to think about how to provide the necessary funding by mitigating the risk if necessary. So requirements are quite different, but we are trying to meet all kinds of the customers' needs, right?
Thank you. Let's focus on Africa and developing Asia. We all know that emerging and developing markets face considerable challenges around liquidity pressures, risk distribution, access to correspondent banking, and access to trade finance. How is SMBC helping bridge some of these gaps?
Yeah, in those emerging countries, first of all, we are trying to cover all the regions, including emerging countries. So those regions like Asia and Africa are very important the areas and for our business, right? And then in those countries, of course, that we need to live with the credit risk, right? So we are not funding or trying to finance by ourselves, but we are partnering with our partner banks or institutions, and the multilaterals and DFIs are our good partners, especially in the Africas. We have multiple partners, institutions there to co-fund or to get the guarantees or to mitigate the risk, right? In Asia, slightly different because not only those multilateral cooperation, we also have a partner, kind of the multi-franchise banks in a certain countries, right? We made a big investment into certain countries like Indonesia, India, Philippines, Vietnam, whereby we have a certain local banks that we have a capital or stake in it, and then we can also leverage those relationships to support our customers in those regions.
Thank you very much. And that's super, super interesting. I guess it fits nicely into the next question, which is really around transition finance, which is incredibly important. And SMBC has supported several large renewable energy and infrastructure projects. Can you talk through some of these notable projects and the role that trade finance has played in these projects?
Oh, thank you. First of all, not only the trade finance, but our bank is very strong in the project finance as well. So in those areas like renewables, infrastructures, and energy transition, we are actively financing through the project finance the teams. But our approach is slightly different, but because the project finance is sometimes a bit costly, and then the for the customers, and then so we are trying to kind of the bridge the gap between the customers' financing demand and also the cost, right? And then what we are doing in those areas of business is basically trying to finance the construction period, right? Because that's the period that probably that it's most costly, right, for the project finance. So we're trying to support our customers who are the project companies or buyers to procure the equipment, because this is the area that it's quite a capital intensive area. So many customer does not want to just borrow the monies or the for that purpose. So we are using the supply chain finance, receivable finance tools to bridge the gap so that we can provide financing during that period. And that is also very accounting. It's very friendly financing method accounting wise as well, because typically it's not recognized as a simple debt as well. So that's where the way that we are supporting those projects.
Kawamura-san, trade corridors and trade routes continue to change. We have geopolitical tensions. We have huge changes across the supply chain. How does the global bank adapt to ensure its corporates remain resilient in terms of its supply chains and changing customer needs, etc.?
Okay, that's a great question because um, yes, that's true that for the customer's perspective, the maintaining the supply chain is the very crucial, especially under these uncertainties, right? So what we are trying to do is that not only looking at the customers' the financing requirement, but we are looking at end-to-end supply chain finance, right? We have a customers who is getting who is procuring from certain suppliers, and then they are also selling to certain buyers, and the buyers and suppliers, right? So we try to look at the end-to-end trade flow, and then try to figure out where is the bottleneck in terms of the financing, and then where is the opportunity for us to support. So and then especially under this uncertainty, there are a lot of changes in the supply chain finance, and then customers' requirement for the risk mitigation arises, right? So that's where we can also partner with the local banks in emerging countries, and then trying to support our customers by mitigating the credit risk. Right?
Thank you. Now, earlier this year in February at the TTP Awards in New York, SMBC won Best Trade Finance Bank of the Year, both for the Latin America and global category. What does this mean for you?
Of course, that means a lot, and then it's our honor to have this excellent award. And then since we're trying to entertain or serve our customers' requirement globally, so that's why this kind of award means a lot. And then because uh, it means that our effort to meet customers' requirement globally has been well recognized in the market, and then so it's very encouraging. And then with this award, maybe our people in my teams are quite motivated, and then we're trying to innovate our solutions, and then trying to keep supporting our customers globally.
Thank you. And looking ahead, what global trade trends do you expect will have the greatest impact on demand for trade and working capital solutions over the next few years?
Yeah, it's a probably slightly different from the past decade, because the probably trade finance requirement does not necessarily link to the trade volume itself, because the currently we see a lot of the uncertainties such as the sanctions and the tariff wars and geopolitical risk, etc. Right? And then whenever those event happens, the customer need to change their supply chain or the risk management, etc. So probably we will see more and more demand for such the risk mitigations or the financing in line with the change of the supply chain of the customer. So that is one aspect. And the other thing is that digitalization, probably, since that the technology is advancing very fast. So we are able to finance those customers who were not able to be financed earlier, right? So the probably that we can our customer base will be broadened, and then our solution will be more kind of the innovative in that sense, right? So maybe that we also need to keep developing our capability of the products, and then would like to keep supporting those customers in the coming years as well.
Thank you very much. That was Kawamura-san, General Manager, Global Head of the Trade Finance Department at SMBC. Kawamura-san, thank you very much for joining us on TTP Studios.
Thank you very much.